it improves our debt to EBITDA ratio. And then finally, it gives us and our shareholders the confidence that our overall debt structure is now in place to continue to decline over time from our normal operating results.
All right, welcome back inside our proactive newsroom. And joining me now is Lou Ferraro. He is the Chief Financial Officer for Synchronoss Technologies. And Lou, it's good to see you. How are you?
I'm well, Steve. How are you today?
I'm doing very well. Thanks very much. Good to have you along because the company out with some news recently on something that was expected, but it's always good when it happens. That is, you got some tax relief. So maybe you can kind of explain this. It's all part of a program, right?
Yes, Steve. So in March of 2020, the federal government enacted the CARES Act, which is the Coronavirus Aid, Relief, and Economic Security Act. And that enabled federal taxpayers to apply for refunds that were very advantageous to stimulate growth after the impacts of the pandemic.
And so you were able to do that and just completed sort of you got an initial tranche of it. Now you've got the rest of it, correct?
Yeah, so Steve, some brief history. We
Yeah.
filed for just over $46 million of refunds in 2020. We very expeditiously got about $18 million. And then the government said, we're going to let, companies settle in a little bit. And they decided that they were going to audit any company first before they paid them if you had received in excess of $5 million, which obviously we had. So just recently, we were notified by the IRS that we would be receiving the total refund that we still had outstanding of $28 million, plus applicable interest, which actually for us totaled $5.3 million. And that has now come to fruition. We just recently received a little over $30 million, which we immediately put to use to pay down 75% of our term loan that we have with TP Birch Grove, which was a condition of the term loan. So that was a payment of just over $22.5 million. We are expecting another $3.7 million from the IRS, and we will use that to pay down another $2.8 million of the term loan.
And Lou, this is significant because not only are you getting that money in from the government, which is great, and when you get audited, you usually don't expect to get a lot of money back, but it's good to have that happen. But
Absolutely.
you're also able to the stipulations of this deal specifically. It's important to get this money and also for rates and things like that. Maybe talk to about the trickle down effect here.
Absolutely. Excellent question, Steve. So the first thing it does for us is it improves the company's overall liquidity. Secondly, it immediately gives us an annual interest savings of about $2.9 million, which for a company like Synchronoss as a small microcap is a very significant amount of savings. It improves our debt to EBITDA ratio. And then finally, it gives us and our shareholders the confidence that our overall debt structure is now in place to continue to decline over time from our normal operating results.
And that's obviously key because debt in a company can be a challenge. But with the growth that you're seeing within the company, and now to get that sort of the financial balance sheet in order, it really puts the company on a strong foot heading forward.
Yes, it does, Steve. And one of the things that we've been very fortunate of is we've had a great relation with TP Birch Grove. We did some refinancing with them in 24. We refinanced the entire stack for the company this year in 2025. And so we are really in a good place from an overall debt perspective, improving as we go forward, and of an overall liquidity perspective.
Well, Lou, I really appreciate your time. Thanks very much for getting us up to date on what's going on. And we look forward to a conversation again, okay?
Steve, thank you very much. Have a great day.
You as well. There's Lou Ferraro, the Chief Financial Officer for Synchronoss Technologies.